Hi everyone, welcome to FOREX Trading Empire 2026 Mentorship Program Lecture 11. And in the Lecture 11, I'll be doing a live top-down analysis on the major pairs in which we have been trading in the 2026 Mentorship Program. So moving to the chart, last week I talked about price running out the sell side liquidity. Now, for those that have watched the previous week live chapter analysis and went through the market review I did, which was available yesterday. I talked about how price traded lower to run the sell side liquidity and looking at price from the opening price. I'm on a weekly time frame on the dollar index. From the opening price, you can see the price open, took out the sell side liquidity. Currently, I can say there's a large new week opening gap compared to the closing price of last week. You can see there's a big gap between last week closing price to this week opening price. So looking at this price action from the weekly time frame, now basic bias is to say that we're on a downtrend on the weekly time frame, that if this trend were to continue, price using a higher time frame resistance area, then we will be anticipating lower prices for price to run the overall bias, which is to take out the sell side liquidity. Now, you can see that's the ideal bias in price. But looking at it from an individual week, what is price going to do this week? Seeing the price open, took out previous week low, looking at this bias, drawing out previous week low, using the weekly time frame trading to a point of interest where I will be anticipating lower prices. Remember, I wouldn't be taking any sell with only the idea of the weekly time frame, because the weekly time frame just took out the sell side liquidity, and from the opening price open below the previous week closing price and below the previous week low, which means if there's any liquidity below this candle for price to use as a draw on liquidity to trade lower, price already took out the liquidity. So looking at this weekly time frame, I wouldn't say I'm anticipating a retracement, or there's a possibility of a retracement. And if you want to know if there's going to be any retracement into the previous week range, it should be from the daily and the 4 hour time frame. So from the weekly time frame, we don't have a clear bias on where price is trading to. And most times, if I were to use only the weekly time frame, I will wait to see how this week candle will be closing, which will take around 1 or 2 weeks before actually taking any trade, which we're not going to be waiting for that. It's just, I'm just trying to give you guys the idea that there isn't any clear continuation trading lower based on the fact that price open with a gap, and that gap took out previous week low. So for a continuation, we need to look at lower time frame to see if the lower time frame is going to be retracing to the 1 hour, which most time I do use the daily. So a retracement to a daily point of interest would be ideal to look for a continuation lower. But we'll be sticking to what the daily will be doing this week. On the daily time frame, after running out the sell side liquidity, you can see the gap in price. Here's the current price action from the closing price on Friday. The ideal scenario for me to look for a continuation lower, maybe a complete run on the sell side liquidity, is to see a retracement to a daily point of interest. Now, if the Monday candle will close, leaving a fair value gap, I will be marking out that fair value gap and paying attention to how price will be retracing to the fair value gap to use it as a resistance level to trade lower. And my first draw on liquidity should be Monday's low, and the overall target is the sell side liquidity. I can say that overall I'm still bearish on the dollar. I'm still anticipating lower prices on the dollar, but the timing isn't right for me to use any time frame for the main time. Which my middle time frame I do use for buyers is the weekly and the daily. When I look at price on the weekly time frame to have more clarity to what I'm looking at and for those specific timings for those specific days where price will trade to that bias is the daily. Now, if you have gone through the lecture where I talked about timing in price, you know that I use the daily to know those days where there's a high probability of price trading to the bias. Just like the example I gave last week lectures. There's an example I gave in one of the lecture on how to take advantage of the days where the timing is right for the daily to expand, which was higher prices. It was from the Euro USD, where the timing was aligned for in price to trade higher. The same goes to the dollar index. Currently, the timing isn't right to look for lower prices because we want to see a retracement because there might be a retracement after a run on a liquidity, and that retracement, if you look at it from a fib level, from the swing high to the swing low, an ideal scenario should be a little bit above the discount level. Once price trades above the zero point 0.5 level, those are high probability, mostly when it's trading to a point of interest, which like a daily fair value gap, another block, or a weekly order block, which you can see I already marked it out. Here's the weekly order block, and it's above the zero point 0.5 level. But at the same time, pay attention to how price is reacting on any fair value gap at the discount level. Price might use it as a resistance to trade lower. Just know that pay attention to the daily time frame mostly. Look at how price is reacting, trading higher. Look at how price is reacting, trading higher. Look at how price will be expecting a daily point of interest. And if that point of interest is aligned with the idea in price trading lower, then those are high probability setup for you to take advantage of. On the 1 hour time frame, you can see the opening price. Now you can mark this as a gap. Make sure you pay attention to gaps in price. Now you can use the 5 minutes, you can use the 1 hour to mark your gap, but I just use whatever time frame I'm in when I remember to actually mark out the gap in price so that I can take full note on how price is reacting to it. Now, for intraday traders and day traders, you know that this is hands-off market because there isn't any clear bias. Seeing this big gap might be a fill on the gap, or there might be a trade away from the gap. You can't tell currently now, so it's best you wait for price to align with the daily perspective before actually looking for any intraday setup or day trading trades. Like I said, those are the key factors for you to wait for before actually taking any setup. Let's go to Hero USD. Let's go to the weekly time frame on Hero USD. Now, the price action on Hero USD is quite similar to the dollar index, which I've talked about why they are similar because they are correlated and they are inverse correlated around 90% plus. So last week, we expected the weekly order block which I talked about beforehand. For those that have gone through the live last week live chapter analysis, I talked about the price action and price trading higher to run the buy side liquidity. After price took out the buy side liquidity, new week opened with a gap compared to the closing price last week. And the drawn liquidity is still the buy side liquidity. We just need to wait for the right timing on the weekly and the daily time frame before anticipating higher prices to trade higher to the buy side liquidity. On the daily time frame, if Monday candle would have closed, then you'll be marking out your fair value gap and you want to see price retrace to the fair value gap to use it as a support to trade higher to run the buy side liquidity. This is the ideal scenario in price for you to be looking out for. Now, depending on the time price will be using to do all this, but this is my idea going in the week. I want to see a support in price and higher prices to run the buy side liquidity. Now, my first drawn liquidity would be Monday's high, because if price were to close below and Tuesday were to retrace to the fair value gap, then my first drawn liquidity will be Monday's high. And just if there will be any continuation in price, then I want to see price go for the buy side liquidity. 1 hour time frame, still the same bias. Currently, still waiting the price and to see an alignment from the daily time frame before actually taking any trade. Or you can see the gap in price from the closing price to the opening price. Make sure you always mark out the gap in price. It helps you to understand how price is trading. Whenever price is below the gap in price, is a discount compared to your buyers. Below the opening price is a discount price. Above the opening price is a premium price. And mostly, if you're anticipating higher prices and price is at a discount, respected a daily point of interest, trade above the new week opening gap, there's a more higher chances that price wouldn't be retracing below the new week opening gap. It will stay above the new week opening gap to trade to the bias, to your overall draw on liquidity. And in some cases, price use it as a support and as a resistance depending on how price is trading. Why most times I use it as a quick way to understand that if price is in a discount or in a premium price. So let's move to GBP USD. On the weekly time frame on GBP USD, still the same bias run on the buy side liquidity. Last week, finishing higher, took out the weekly high, opening price open, still the same drawn liquidity. We're just looking at the point of interest price we use as a support to trade higher. And we want to be taking advantage of price once it is retraced to that point of interest. Daily time frame, still the same idea. Pay attention to the daily time frame. I've talked about it that we want to see a retracement to a daily point of interest. Drawn liquidity should be the buy side liquidity. Now you can see the alignments between the dollar index, the Euro USD, and the GBP USD. You can see how similar they are when it comes to the bias that they are trading to. They're well similar with the idea of price trading higher to run the buy side liquidity. Now it's all about how will you be taking advantage of it. Whenever they are aligned, makes it a strong probability trade. A strong probability trade when those three currencies are mostly aligned. Now, when it comes to the JPY pair, it's only when the JPY is strong and the dollar is weak. Those are the times that the JPY will be fully aligned with the idea But if the JPY is weak and the dollar index is weak, in most times price will only trade higher, meaning that the JPY pair is losing value compared to the dollar more faster. But sometimes it leads to correlation, it leads to consolidation. But take note of that if the JPY pair is strong and the dollar is weak, those are the times you see alignment in the four currency, which is the dollar index, Euro USD, GBP USD, and USD JPY. But in any scenario that the dollar is weak and the JPY is weak, it leads to consolidation mostly. Then if there's any spike in price or change in price in the price action from either currency, either the dollar is now gaining strength against the JPY, then you can see a trend. But looking at it from a correlation perspective, you need to be more attentive on how the JPY pair is actually trading, the JPY index. Pay attention to how the JPY index is trading, then you will understand how to trade USD JPY. Remember, you want to see USD JPY stronger or weaker. Let's just say the opposite direction of the dollar index to anticipate a trend on the USD JPY. But if they are trading to the same bias, in most cases, it will lead to a consolidation or most time manipulation before the actual trend when there's going to be an inverse correlation between those currency when they have well, in a scenario where you see the dollar gaining strength and the JPY losing strength. So still the same idea, anticipating higher prices. We want to see price support from a daily point of interest to trade higher. Now let's talk about USD JPY. Now USD JPY have been trading lower from the opening price. Looking at it from the weekly perspective, from the weekly time frame, the trade below daily fair value gap closed below. I was anticipating a run on a sell side liquidity. Now I wasn't anticipating the idea of price opening and trading directly to the sell side liquidity. I was actually looking at it as the draw on liquidity this week. But seeing the price already traded lower, took out the sell side liquidity. Now we can call this a shift after the run on the buy side liquidity. And we might see a brief retracement trading lower. Now I don't know how far price will trade lower, is depending on the price action. But looking at price, looking at how strong the sell have been, this might lead to real lower prices because from the opening price, looking at the closing price from last week and the opening price of this week, this is a great indicator to indicate that there's a lot of volatility in the JPY pair and the dollar because that led to the same gap in price on Euro USD, on GBP USD, and on the dollar index. I think it's due to some political. I can also I can't say political issues. It's more about the Bank of Japan trying to reduce, trying to give more value to the JPY currency. They're looking at it that it's priced at a cheap rate and they're trying to step in to increase the value of the currency. I think that's one of the major drivers in price. Now, it's mostly about speculation. I think there's no real news. There might be a real news compared to the time I'm making this video, but that's the whole idea that the Bank of Japan is stepping in to help the JPY currency gain value. So if you're looking at the 30-year bond of the JPY 30-year bond, you'll be seeing lower prices in those price action because they're mostly going to be selling bonds, selling out US bonds so they can bring more capital into the JPY currency. Now, that's, that will be a different topic when it comes to how to trade and applying fundamental. I'm not going to go really deep into it in this currency or in this lecture, mostly because I don't want to spend more time doing this live. But understand that there's a news driver in this price action that might lead to lower prices, to a real deep lower prices. Something like this, lower prices on the JPY pair. So pay attention to the 10-year bond, 30-year bond of JPY. As long as they're declining in price, declining on the percentage yield that you'll be gaining on a yearly interest of holding those currency, then that might tell you on how price will be declining, trading lower. But at the same time, it doesn't matter what the technical says. Sorry, it doesn't matter what the fundamental says. As long as the technical is not aligned, I will advise that you don't take advantage of any idea you got looking at the fundamental side. Just make sure they are both aligned before actually taking any aggressive trade. Now, I do look at the fundamental side, but I don't make it my overall decision making plan whenever choosing on what to do on a weekly basis, because those are micro news and sometimes they do take a very, very long time to take effect in the price action. You might see it on the news, you might see it on economic websites that there's going to be a decrease in a specific currency, but the timing is way different compared to how you're looking at price on a technical perspective. Now, if you were to look at it from a technical perspective, you might get the timing right on where they will be stepping in. So on the 1 hour time frame, from the opening price, you can see how price have been trading lower. Now, I will be looking at price in a perspective that I want to see a retracement to a 1 hour point of interest. Sorry, to a daily point of interest before actually taking any trade. If price were to respect a daily point of interest, then I will be anticipating lower prices and my drawn liquidity should be Monday's low. That is the idea going in this week. And a lot of currency that has been really, really interesting, like gold reaching a new all-time high of around 5,000 plus. But I wouldn't be talking about gold in this lecture. You can, if you notice, I removed gold from the live chapter analysis. We know last year I do talk about gold. I removed it because I don't want traders to be risking a lot of money in those type of markets if you don't understand how to trade an all-time high. Trading an all-time high is very different because you don't have a drawn liquidity above price for you to use as a target. So, and there's not much of a retracement, a deep retracement to a discount level before buying for it to form a new high. Sometimes you might just see a few consolidation and you see a jump in price and you see a new high, mostly on gold and sometimes on the S&P 500 and on Nasdaq. But when it comes to all-time high, we know that gold have really, really been on an all-time high for a while, creating new highs, and currently now is around 5,000 plus. So just go to low volatile markets for your study. Don't look at currencies like gold. You need more reps for you to trade currency like gold. And remember, this is for learning purpose, not a signal for you to look for trade or for you to use as an idea in looking for trades. No, this is for learning purpose. I'm only telling you guys what I'm anticipating so that you guys can learn how to do it beforehand and learn how to take advantage of it and how to have a trade plan before every every week. Have an idea on what you're looking at price to do on a weekly basis, on a daily basis. The lecture is mostly to show you guys how to do it. So focus on the educational part. Look at low vertical currencies. I can say on a mid-range, just focus on the currency pair I'm talking about in the lecture. Use those currency pair to understand price. Then you can use the technical aspect on any other currency. I will talk about all-time highs, how to trade an all-time high. but it will be on gold. And I'll do it later on the lecture, but it wouldn't be on the early part of this lecture. Let's say around, let's say after August, around September, during those times. Then I will move, I will talk about gold, how to trade an all-time high, give you guys a simple trade plan to use when trading an all-time high. Because an all-time high is all about when is price going to create a new high, and how will you be taking advantage of the price action before creating a new high. So we'll talk about this when I get to that part of the lecture. But for now, we're doing the same routine, going through the major pairs, which is the dollar index, Euro USD, GBP USD, and USD JPY. Those are the major pairs we'll be trading throughout the 2026 mentorship program. Now, the reason I'm telling you guys the major pairs because I've seen lots of queries about a lot of questions or a lot of requests that I should talk about some specific currency. You guys talked about the Russell 100. You talked about the Nasdaq. You talked about S&P 500. Now, this is a beginner's level training, so I wouldn't go to those currency. I don't want to make it more complicated. It's already complicated going through for currency, but the reason I'm going through for currency is because there's a correlation in those currency. So still find it useful, but the major currency that I'm trading is the dollar index. I'm only taking advantage. I'm only taking advantage in other currency when I have a clear perspective on where the dollar is trading to. So you should understand the reason why I talked about the dollar index the most. And on the Telegram commentary, I only give you guys perspective on what I'm looking at the dollar doing and what is my draw on liquidity on the dollar index, because that's the major pair I'm actually trading. But whenever there's a strong dollar, I know that there will be lower prices on Euro USD, and whenever there's a weak dollar, I know that there will be higher prices on Euro USD. So understand correlation, understand how I'm using the dollar as, I can say, as a signal to to go to other currency that are correlated with the dollar to look for opportunities to take advantage of that trend. So that is it for this lecture. Make sure you go through price, study along as price develops till on Friday and to the next lecture. So that's it for this lecture. See you guys to the next lecture.